Hope you all are doing well. I am Karan Bandal from Econosite, your weekly wrap on economic news from India and around the world. So let's get started. Maruti raises capex by 40% to 7,000 crore rupees. India's largest car maker Maruti Suzuki has increased its capital expenditure by 40% to fund the construction of its new plant in Haryana. The car maker commands almost 40% market share in India's passenger vehicle segment. And we talked about this in one of our previous weekly wraps. If you're interested, I will leave the link in the description below. You can check that out later. They will spend more than 7,000 crore rupees during financial year 2023, which is higher than the capex guidance of 5,000 crore rupees they gave in April 2022. Company's 12-year average capex was 3,000 crore rupees per year. During financial year 2022, the company had earmarked capex of 4,500 crore rupees and now 7,000 crore rupees. So you can see a steady rise in their capex. And companies only invest in capex when there is a strong demand for their product. If you have seen our previous videos, we know that capex is a good kind of investment. It is excellent for the long-term growth of an entity. According to Maruti Suzuki CFO Ajay Seth, this capex will be spent on Haryana's Kharkhoda facility where construction work has already started, investment on tooling etc. for all the new model launches, and routine research and development and maintenance. The new plant at Kharkhoda, Haryana will start producing 250,000 units per annum and will eventually churn out 10 lakh units per annum or 1 million units per annum. Demand for Maruti Suzuki vehicles remains strong during the first half, that is April to September of 2022. The company sold close to 1 million units, 34% higher compared to what it sold in the same period last year. For the past 10 years or so, I have been reading that India's economic growth has not lived up to the expectations, mainly because private investment is not panning out the way it should. So, this may be an anecdotal piece of information, but it's good to see that a major private player in India is putting its foot on the capex pedal. On a similar note, let's look at another major private player in India. Adani Group to invest $150 billion in pursuit of $1 trillion valuation. At an investor meet organized by Ventura Securities Limited in New Delhi on October 10th, Adani Group CFO Jugeshinder Singh detailed the growth plans of the group. According to him, over the next 5 to 10 years, the group will invest massive resources in a variety of sectors in a strategic manner. $50 to $70 billion in green hydrogen business, 23 billion in green energy, 7 billion in electricity transmission, 12 billion in transport utility, 5 billion in road sector, 6.5 billion in data center business with cloud services, 9 to 10 billion in airports, and 10 billion in cement sector with the acquisition of ACC and Ambuja Cement. They also plan to enter petrochemical business, copper sector, and healthcare. Adani Group's market cap was $16 billion in 2015. Today it stands at $260 billion, a surge of over 16 times in 7 years. The group has a vision to enter an exclusive club of companies with $1 trillion valuation like Apple, Saudi Aramco, Microsoft, Amazon, and Google's parent, Alphabet. Most businesses of the Adani Group enjoy best-in-class margins. For example, ports business 70% margin, Adani Total Gas 41%, Adani Transmission 92%. These businesses are profitable, efficient, and generate high levels of free cash flows. On financials, Singh said the group generates $8 billion in EBITDA, that is earnings before interest, tax, depreciation, and amortization. Now, this is an accounting term or concept. For the sake of our conversation and in the interest of time, let's say the company makes a profit of $8 billion. Dollars. Of this, about $3.6 billion dollars is spent on servicing the debt, that is, paying interest and principal. So, that is 45% of EBITDA is going towards debt servicing. $700 million dollars go towards taxes and $1.8 billion dollars go towards capex. Again, a strong capex number. So, this is another story about a major Indian private player increasing capex and investment in various related sectors. Again, which should bode well for the long term growth prospect of India's economy as a whole. After investment activity, let's look at employment. Job market gains momentum, reveals Avsar's survey. Avsar is a talent management firm. Their survey has revealed that during the past 2 quarters of 2022, 80 lakh jobs were created, that is 8 million jobs, across various sectors, and this trend is expected to sustain during the last quarter of this year as well. The report states that sectors such as tech, pharma, and BFSI stands for banking, financial services, and insurance, have been the highest job generators so far. The survey also shares that Pune is leading the job generation market this year with 78.11% employment rate, followed by Lucknow at 74.32% and Tiruvananthapuram at 64.48%. If you look at the breakdown of sectors, sales and business development has been the highest job creator with 26.9% contribution. IT or ITES, that is Information Technology Enabled Services, created 20.6% of the total jobs, followed by marketing sector with 9.9%. If you extrapolate these numbers, we can project that close to 16 million jobs will be created in 1 year. That is a creation of 1.33 million jobs per month. This is the level of job creation India needs to absorb massive educated workforce entering the job market every month, no less. We have to keep in mind though, we are seeing these encouraging numbers as we are coming out of pandemic lockdowns. There is pent up consumer demand which will moderate at some point, and a possibility of global recession next year. Still, all in all, encouraging scenario for Indian employment. Let's see how things pan out as we go into the next year. Let's look at another interesting report. Nearly 1 in 3 Indians in middle class to double in 25 years. A survey was conducted by economic research outfit Price, that is People Research on India's Consumer Economy. It is a think tank. They also go by the name ICE 360. You can check out their website. I will leave the link in the description below. Rajesh Shukla, MD and CEO of Price, said that by 2047, if political and economic reforms have their desired effect, the India income pyramid will have a smallish layer at the bottom, a huge bulge of middle class, and a big, creamy, rich layer at the top. The survey defined 7 categories by income. Let's look at the key ones. Households earning less than 1,25,000 rupees per year, classified as destitutes. When we say household income, it means that if there are 2 people in the household, husband and wife, or any 2 partners for that matter, and both work and earn, their combined income is treated as total income for that household. Households with income between 1,25,000 rupees to 5 lakh rupees per year, aspirer class. Those with income between 5 and 30 lakh rupees per year, middle class. This will be the focus of this discussion. And households earning more than 30 lakh rupees per year, rich. Now that we know what we mean by middle class, let's explore the survey. The report states that middle class was 14% in 2004-05. It increased to 31% last year, that is 2021, and is projected to rise to 63% by 2047. If Indian population remains steady at 1.4 billion by then, India's middle class will be 882 million. That is almost 2.5 times total current US population. So why do we focus on middle class so much? Look at this table. Middle class makes up the majority of the consumer spending in the economy. Total consumer spending makes up 60% of India's economy. So a strong middle class is a prerequisite for a stable and strong Indian economy in its current composition. Also, a super rich household is defined as those earning over 2 crore rupees per year. In 2021, Maharashtra is the richest state with 6.4 lakh super rich households, followed by Delhi at 1.8 lakh households, Gujarat with 1.4 lakh, Tamil Nadu with 1.37 lakh, and Punjab with around 1 lakh super rich households. The number of super rich in the country has risen from 98,000 in 1994-95 to 1.8 million in 2021, that is 18 lakh households, 18x surge. So, many positive developments in regards to India's economy. Major private players have begun to spend and invest in capex. As we know from our previous weekly wraps, government continues to spend on building hard infrastructure. So on this dual engine of growth, that is government spending and private investment, India's economy is positioned well for the long-term success. The recent surge in job creation should also kicking the virtuous cycle of economic growth. And Price's survey indicated the demonstrated ability of India's economy to expand its middle class, which should continue in the future as well if the right political and economic reforms are continually enacted. I hope you enjoyed this week's economic wrap. I will speak with you again next week. Until then, take care.